Hello everyone and welcome to our weekly global market outlook. I'm Tolga, here to guide you through the key events that shaped the financial markets last week and to preview what's coming up in the week ahead. From record-breaking stock performances to significant moves by central banks, there's a lot to unpack. So let's dive right in. The major US stock indexes posted their second consecutive week of gains. The S&P 500 made headlines by surpassing its previous record high, set 7 weeks ago, thanks to a robust rally on Thursday. Both the Dow Jones Industrial Average and the Nasdaq Composites climbed around 2% for the week, although they remain approximately 1% below their all-time highs reached last month. Corporate earnings continue to impress, with fourth quarter net income for S&P 500 companies expected to rise by 12.7% compared to the same period last year. This would mark the highest quarterly earnings growth rate in 3 years, signaling strong corporate health and boosting investor confidence. In a noteworthy move, the Bank of Japan raised its short-term policy interest rate from 0.25% to 0.5%, the highest level since 2008. These decisions aim to help Japan transition out of deflation and stimulate economic growth after decades of stagnation. The yield on Japanese government bonds responded by edging higher, and the yen experienced increased volatility in forex markets. On the economic data front, US consumer sentiment took a hit in January, declining for the first time in 6 months, according to the University of Michigan survey. An increasing number of consumers expressed concerns about rising inflation and potential unemployment in the coming year, reflecting underlying economic uncertainties. Oil prices faced pressures last week, with US crude oil falling more than 3%, ending around $74 per barrel. This decline snapped a streak of 4 weekly gains and was influenced by global demand concerns and geopolitical factors. Gold prices, on the other hand, surged, nearing all-time highs. Investors flocked to the safe haven asset amid ongoing trade tensions and uncertainty surrounding tariff policies. The US housing market showed signs of continued weakness. The National Association of Realtors reported that existing home sales fell to 4.06 million units in 2024, the lowest annual level since 1995. High interest rates have been a significant headwind, dampening buyer activity and slowing the real estate market. Global markets were also influenced by the policies of the incoming US administration. President Trump's decision not to impose immediate tariffs on major trading partners, including China, eased some trade tensions. His remarks favoring negotiations over punitive measures sparked optimism, propelling the S&P 500 to new heights. However, caution remains as potential tariffs could still be on the horizon, affecting market stability. This week, central banks take center stage. The US Federal Reserve concludes its 2-day policy meeting on Wednesday, while the consensus expects the Fed to keep interest rates unchanged. Investors will be keenly watching Fed Chair Jerome Powell's press conference for any signals about future monetary policy, especially in light of mixed inflation data. Across the Atlantic, the European Central Bank meets on Thursday. There is growing anticipation of a 25 basis point rate cut to support the Eurozone's sluggish economy. ECB President Christine Lagarde has hinted at the possibility of further easing, which could have significant implications for forex and bond markets. The Bank of Canada also meets this week, with expectations pointing toward another 25 basis point rate cut, the 6th in a series, as the economy grapples with lower growth and inflation. Now let's look ahead to upcoming week day by day. Here's what we have coming up. Monday, the US Consensus Bureau released new home sales data for December. Analysts will look for signs of stabilization in the housing market after recent declines. Tuesday, a flurry of US data includes the S&P Case-Shiller Home Price Index, offering insights into home price trends, and the Consumer Confidence Index from the Conference Board, a key indicator of consumer sentiment. Additionally, durable goods orders data will shed light on manufacturing activity. Wednesday, beyond the Fed meeting, Australia reports its Q4 inflation figures. Markets expect a year-over-year increase of 2.5%, down from the previous quarter, influencing the Reserve Bank of Australia's policy outlook. Thursday, the US releases its advanced estimate of fourth quarter GDP growth. Economists predict an annualized growth rate of around 2.7%, slightly lower than the previous quarter, reflecting moderate economic expansion. Pending home sales and weekly unemployment claims will provide further context on the economy's health. Friday, the Personal Consumption Expenditures Price Index, the Fed's preferred inflation gauge, is due. This data is pivotal for future monetary policy decisions, especially if it deviates from expectations. In Europe, preliminary GDP figures for the Eurozone, along with Germany, France, Italy, and Spain, will be released. These will be critical for assessing the region's economic momentum and justifying the ECB's policy decisions. Japan will unveil a host of data, including industrial production, retail sales, and unemployment figures. Following the recent rate hike, these indicators will be scrutinized for signs of economic strengthening or lingering weaknesses. Corporate earnings will be in full swing. Tech giants such as Microsoft, Meta Platforms, Tesla, and Apple are scheduled to report their quarterly results. Their performances and forward guidance will be pivotal for market sentiment, particularly in the technology sector. To sum up, last week saw equities reaching new heights, supported by strong earnings and eased trade tensions, while central banks made moves that could shape economic trajectories. This week promises to be equally eventful, with central bank meetings likely to influence monetary policies globally, key economic data releases to watch, and major corporate earnings that could set the tone for markets. Thank you for joining us on this market journey. We hope this overview helps you to stay ahead in your financial endeavors. If you found this information valuable, please give this video a thumbs up and share it with fellow finance enthusiasts. We would love to hear your thoughts on these developments. What are you watching in the markets this week? Let us know in the comments below. Don't forget to subscribe to our channel and hit the notification bell so you won't miss our upcoming analysis. Until next time, stay informed and make smart investment decisions.